Good morning and welcome to Armanino's presentation today. My name is Mary Tressel and I want to thank all of you for dialing in. Today we're going to talk about how to scale technology finances to support your growth. First of all, I'd like to review with you how to use your webinar pane. In the upper right-hand corner of your screen, you will see an orange arrow. To expand the webinar pane, just click on the orange arrow. At any time throughout the presentation, you may type in a question for our staff, and we will answer those questions as time allows at the end of the presentation. You just enter your question and then hit the send button, and we will see it on our end. Secondly, we want to make sure that you have your audio settings set correctly. If you've called in on your telephone, please use that radio button there next to the telephone. If you're on your computer mic and speakers, click on that. This helps you to make sure there's no echo in the sound quality. And I would like to let everyone know we will send out a copy of these slides a couple of days after the webinar. So if you need to see these slides again, we will make sure we send them to you. With that, I'd like to introduce our presenters. The first is Eric Thomas. He's a senior manager in our consulting practice. Eric has more than 15 years of experience in finance and accounting in the private sector, and he joined Armanino in 2014. He's served as a controller for both public and private companies in the government contracting and professional services industries. His diverse experience includes building accounting organizations, ERP implementations, corporate restructuring, designing and implementing internal controls, and business process optimization. Our second presenter is David Miller. He's the director of our outsourced and finance and accounting practice, and he has more than 25 years of experience providing superior client service and support for emerging and growing businesses. His expertise is focused on the business needs of the client and translating those requirements into actionable financial and accounting solutions. Our learning objectives today are we will help you to determine how to maximize the benefits of production of financial information. We'll help you optimize the finance function, including both departmental and regional reporting and consolidations. And then we'll talk about how you can focus greater time and energy on your organization's growth strategy and less on bookkeeping functions. And with that, I'm going to go ahead and turn it over to Eric.
Thank you, Mary. I think what we should talk about first is that accounting is just there to help you drive your business, right? It provides the information you need to know that you're maximizing or optimizing your profitability, that you're using your cash appropriately, that you're operating efficiently, and it enables you to compare yourself to peers or to standards that you have set for yourself, be they operating or profitability. And then based on those, you can identify if you have performance issues, performance exceptions that are going really well, or some items that need to be addressed. So we talk to tech clients and companies every day, and we've heard a lot. And I'd like to ask David what he hears as the pain points most often.
Thanks, Eric. Absolutely, and you can see here on the slide we've kind of got four big headlines on here, and let me talk about the operations side of the challenge. Many of our clients aren't very big companies. They may rely on a single individual or a single bookkeeper to really help keep them up to date with reconciling their bank accounts. One of the critical things is making sure that you've got strong internal controls, and we hear that over and over from our tech clients. Somebody's left, or somebody's not doing a very good job, or there's not the right internal controls. So really, one of the critical areas is addressing one of those pain points. The other piece of it is for a lot of tech companies, they're really focused on having reliable financials for both their investors, third parties, particularly as they're going for additional rounds of financing. So they have to have reliable financials, really audit-ready financials, accrual-based accounting. And it's not easy to do that with having someone either as a part-time job as a CEO to try and provide that information, or as part of the or as part of having a third part, an individual try and do that that's not properly educated or experienced. And tell us about some of the other ones that you've heard about, Eric.
Well, what I've seen is that they really don't have the perspective because they're so close to their operations to have insight into those financials, what the numbers really mean, and what the numbers should be, right? They can enter in their part-time, or a bookkeeper can enter the information. They can generate a financial statement, a P&L, a balance sheet, but then they don't really know what those numbers should be, right? Is their gross profit a reasonable percentage, or is it too high or too low? Um, is their cash burn appropriate for their growth plan, or is it too fast or too slow? So what they really don't, even if they're getting by with producing uh, reliable and timely financials, they may not have the insight and benchmarking that would help them drive their business.
That's a great point. I think it's really then important that tech companies have really found that using sort of an outsourced solution to really help provide that information, address sort of the internal controls issues, making sure they're having reliable, quality financials, they're getting them on a timely basis, and then to your last point, really making sure that they're getting the proper insight and analysis on their current financial position.
So we want to look at why outsourcing today. And we have a polling question to check with the audience and what your interest in this topic is. So if you'll hold on just a moment. So you should be seeing the polling question, and it asks, what are your reasons for considering outsourcing? Are you looking to improve the quality and timelines of your financial information? Would you like to better understand your company's performance, reduce your overhead, or do you have some other reasons that you're looking at outsourcing? So we're looking to get all of you to cast a vote here, and if you could just click on one of the selections there, that would be great. Okay, with that, we are going to go ahead and close the poll. David, it looks like the audience is fairly split evenly on the reasons that they are looking at outsourcing.
Excellent. Well, let's take some of that information and go through a couple more slides. We can talk more about the value of the timeliness of information and how outsourcing can also help with some of these other benefits of reducing overhead.
Great. Oops.
Okay. So, David, in addition to getting timely financials, that are reliable, what are the other possible economic benefits you get from outsourcing?
I think one of the biggest ones really is the financial visibility and really having that accurate scorecard of where you've been, and also equally as important as where you're going. So it's really having that financial profit and loss statement that sort of tells you how profitable you are, and then really the other piece of this is the focus on the cash flow information. Cash flow is critical for tech startups, emerging tech companies, established tech companies. You want to know exactly where the money is going and how best to use any available cash going forward. I think the other area which gets to, I think, the reducing overhead point before is cost savings, and there's a number of ways to sort of drive cost savings through getting timely and accurate financial statements, and one is really understanding where your money is going, right, and being able to look at the number of vendors, where you're spending money. Can you consolidate vendors? Can you squeeze some more value out of your existing vendors? And I think the other side of it is that not everybody thinks about is the indirect cost savings, right? What's the cost to your organization if you're a CEO or a COO or a CMO involved in the production and the creation of financial information, right? It's best to have an expert as part of your team who can do that for you, because what's the cost to the business and not getting your full attention? And then Eric, how about you? What are some other examples that you've sort of seen from the benefits of going to an expert or third party?
Well, we had an instance where a client came to us and they had this great software as a service And because of that, they got some good funding, right? And so with that funding came great expectations. So they built out an aggressive sales plan before they came to us, and to do that, so they hired a sales team. They started going to a lot of trade shows. They started advertising everywhere. And as you can imagine, there was a lot of upfront costs from there, from that initiative that didn't lead to immediate revenue. And so they came to us and said, we're not seeing what we expected. So we built out a 6-quarter cash flow to show that, all right, with these costs, you're going to run out of cash earlier than you expected. You should probably start talking with your investors, start talking about additional funding now, because you're going to run out of cash. All right, so that's the first thing. The second thing is let's look at what your non-essential costs are, what's not adding value to your mission, and let's cut those so that we can make this cash last a little longer in case there are any other unforeseen bumps. So something to get you over that hump, like we've all seen, where when do you become independent from the funding and you start generating a positive net income that can start funding operations. And in doing this, we identified, so they reached out to their funders, they got funding, they cut costs, put them in a much better spot. The investors were happy, they were happy, they had better steering, all because they came to us, they talked to us, and we helped them with their forecasting.
Yeah, it's great to be able to get that benefit of knowing that you have a problem, and then knowing that you can go to someone on your team to be able to help create that solution. So I think that's a really great example. So I'm going to jump in here, Eric, and talk a little bit more about what really outsourcing is. And I think there's a lot of value in outsourcing, some of which we've already talked about, but not everyone's really clear on how it works, and we have some misconceptions. I think really our goal and our approach is really to be part of the client team. Really, this is a business about people, and really we want to be an extension of the day-to-day business, or even really just another team that's a virtual team that's working alongside of the tech company team. And there's sort of a number of success factors that make this work. And number one is really personalized support. And our goal is really to build relationships with our clients. And any third party that you use, you really want them to feel, you want to feel that connection with them and be able to communicate with them on a regular basis. We make sure that we have regular communication, regular monthly contact, regular weekly contact, as much as possible, as much as the client demands, and it ebbs and flows as the business grows and evolves. The other factor here is really transparency and timeliness of the financial information. One of the things that we use here quite a bit is cloud-based financials, which I'll talk a bit more later, but really want to be able to have access to your information anytime and anywhere. You want to be able to get to your financial information. You don't want it to be a secret. You don't want it to be lost in the bowels of somebody's desktop computer. And really that goes along with using the latest technologies to make sure that you're getting the most bang for your buck. There's a lot of cloud technologies out there these days that are really kind of a best-of-breed approach. I'll talk about it a little bit in a minute, but it really gives you that access and the information that you need. Not only having the advisors and the experts at your fingertips, but also just being able to open up your phone or your tablet to be able to get access to the information. And the last part is something Eric talked about earlier, really, which is the benchmarking and how are you stacking up against your competition and your peers. Is your profit margin in line with other businesses in your sector or in your group? Being able to get that timely information and be able to share that information is really, really critical. So really outsourcing is a combination of these factors and putting them all together to make to really create a comprehensive service and solution. So one of the things that comes up, and I talked about the cloud technologies, and one of the things that continually comes up, and at Armanino we'd actually done this Cloud Accounting Institute webinar, and there was a survey that came out of it, and the security was really the #1 concern of people having their financial information out there on the cloud. Well, the great news is the cloud is really safer than it ever has been today, or it's safer today than it ever has been. Our tools and the software providers really use the latest in data encryption technologies, and every certainly technology that we're using has been certified and or properly audited. From a technology perspective, the data is safe. It resides in facilities where there's 24/7 security, and there's really limited access to your data. Think about the days when you would just have information on that desktop computer sitting in the middle of the room somewhere that the bookkeeper would come in and or the accountant would come in once a week and do some updates. What happens if somebody spilled coffee on that, right? Your data is completely lost and you have to start over. So really, in this day and age, it's really a lot of the accounting solutions are hosted in the cloud, and they're really part of these facilities that have really robust disaster recovery plans in the event of a horrible situation that comes along, and they're safe and secure, so that and it's encrypted, so that you know that your financial information is safe and you don't have to start over. So let's talk about the some of the cloud technologies that are out there today, and really this is kind of an example of what we have found to be successful with a number of different technology companies, and really I'll just kind of walk through this very quickly. Bill.com, which is one of our technology partners, is really a bill payment solution. It's basically a paperless way of processing vendor invoices. It also can paperlessly invoice your customers as well. And Bill.com really sort of integrates with these other cloud solutions, depending on what's right for your business. If you're a startup company and just getting started, you may want something straightforward like Xero or QuickBooks to get going. Bill.com connects with this application. And QuickBooks and Xero and Intact are really sort of the general ledger applications. They are the hub of the financial information. And in the cloud technology world today, tools like Bill.com, Box, which is a storage solution, and other technology solutions out there can plug into these depending on what your needs are. Everything from POS and billing systems to inventory tracking and purchasing solutions as well. You know, if you're a little bit further on in your business and maybe you're grappling with multi-currency or multiple entities, you know, Intact becomes a really good solution. We have a number of our clients on Intact, and it's a very robust solution. It can really sort of scale and grow. And again, one of the things we've been talking about, all of these have some level of dashboard and high-level information so you can be able to see not only see your information, not only see your bank balance, right? Actually start to realize your information in graphical and visual format, not just financial statements. So you start to see trends in the flow of information. So, and then in addition to that, we have other partners that go into that. Sorry, go ahead.
All right, and we're going to have our second polling question here. So after what you've learned so far today, what do you identify as the benefits of outsourcing? Is it transparency, timely access to your financials, security, or all of the above? So we're looking at what you feel like would benefit your organization, your company. Great. Okay, we have got, most of the group have voted, so we'll go ahead and close that poll and share the results. And it looks like most people are seeing the benefits of outsourcing as all of the above, and then a portion of the group are really looking for that timely access to their financials. So with that, let's move into a case study that we have of a technology firm.
Excellent. So Eric, why don't you talk to us a little bit about a situation that where you've worked with a client to sort of takes us through sort of the life cycle of sort of the business challenge all the way through to the final result.
Sure. So we had a software integrator that had a great reputation, and because of this, they were able to get their clients to pay them ahead of time for their work. So most of their clients would pay them in advance, and they had a backlog, and the work would be done down the road. So this is a great business practice. But unfortunately, they were using those funds that they were paid for future services to fund current operations. So this is risky because if the clients canceled their orders, they didn't have the cash reserves to be able to refund all of the money and keep their lights on. And in addition to this, they had a line of credit balance. So, as the bullet points there, I'm not going to read them to you, but they were really managing by their bank account. They weren't looking at a long-term view of their operations.
So in that situation, did they have any dedicated accounting support at this point, or was it sort of the CEO or one of the leaders sort of bootstrapping the financials?
Well, they came to us because they had someone that was internal that moved out of the area, and they didn't want, and they were moving, and it wasn't going to be a good fit for them to do the work remotely. So really, they came to us because they needed some help, and they said maybe this is a good opportunity to outsource this, so we don't have this risk of turnover again. I think really some clients, prospects that emotional jarring of someone that's been with them for a long time and leaving is kind of a jarring, traumatic experience for them.
Yeah, I completely understand. We've seen a number of those situations. So, tell us what happened. What happened? What did we do to help get this? Or what did you do to help get this addressed and sorted out?
So the first thing we did, we cleaned up the records and just solved a lot of problems that they didn't know that they had. Right. So we identified all the prepaid revenue that they had, and we tracked it separately as deferred revenue. So it didn't just show up as revenue now because they created the bill. It's not revenue. They're not earning it for 2 to 3 months. We added a deferred revenue liability to their weekly cash flow forecast. And this was good because it just added a lot of visibility to that unfunded revenue liability that they had. Then operationally, we said, let's not pay expenses before they're due. Let's just pay them when the vendor has expecting it according to the agreed upon terms. And then let's not let the AR sit. Let's follow up on the aged AR early and often. And then we moved the excess cash as we started to generate it to a separate bank account to start this rainy day fund in case the clients did cancel their order. So we tracked and monitored the operations to build this reserve up until it matched the deferred revenue balance. Once we started getting close to that, we focused on paying down the line of credit. And in addition to that, we did all the normal stuff where we provided timely financials. And really what was important in all of this was the weekly cash flow forecast that not only said this is what we're paying, but this is what we see coming down the pipeline. And that visibility of that unfunded revenue liability that they had. So it just kept it in front of mind and made it important to everyone involved.
That's excellent. And then what was sort of what was the final result? What did they gain from all of this from the business perspective?
Well, from the business perspective, they were just overall more conscious of their use of cash. So that enabled them to pay off and stop using the line of credit. It's still there in case they ever need it, but it's got a zero balance. Once there's that sense of security, they were spending less time on managing their cash very closely and more time on generating the cash. And then we just got in this weekly habit of talking about the incoming and outgoing cash. Now they have a significant cash balance. It's in excess of the deferred revenue. And then, the ultimate metric by which we'll measure our operations is they increase their hours of sleep per night.
So what do you mean by that?
They were calm about their business and confident about the cash flow. So I think, the metric I always hear or the saying is that you've never really had the experience of running a small business until you've laid in bed awake at night wondering how you're going to make payroll. So they didn't have that calm, that kind of fear anymore, and there was just confidence that they had enabled them to spend more time on the operations and the driving of the business.
That's fantastic. And if they are losing sleep at that point, it's what's the next great marketing idea, or what's the next great product opportunity for their business. That's what they should be thinking about.
That's right.
Great. So as we wrap up today's webinar, if you have questions for our presenters, please go ahead and type those in at this time. But today, David and Eric shared with us how an organization can determine how to maximize the benefits of the timely financial information for decision making, how to optimize your cash flow by accelerating the inflows and paying expenses when they are due, evaluate the evolution and security of today's cloud financial software solutions, and how you can focus greater time and energy on your organization's growth strategy, as David was saying, your next great marketing idea, and less on bookkeeping functions. All right, and at this point, we don't have any questions, so what I'd like to do is share with you David and Eric's contact information. If you'd like to reach out to them directly after the webinar, you can email them or give them a call. And we thank you all for dialing in today.